Let's talk about Marvell Technology as they had a great first half of the year, riding on the coattail of NVIDIA. Now, Marvell, they provide components needed in the data centers to run and compute things of that nature for the AI revolution. However, in recent months, price has sagged, and yet price has not reached my ultimate target at the daily sellers level at $77.50. Before we continue with the analysis and look at smaller time frames like the weekly and the daily, let's quickly go over their earnings. They reported a revenue of $1.4 billion for the third quarter of fiscal year 2024, making a 6% sequential growth. Company's data center end market showed strong growth driven by AI revenue and a return to year-over-year growth in cloud revenue. Some highlights from the earnings call: they experienced above market growth in wireless revenue in the carrier infrastructure end market, but expects a decline in the fourth quarter due to the completion of the initial wave of 5G rollout and software demand. Company expects declines in revenue from the enterprise networking, automotive, and industrial and consumer end markets. Marvell forecasts data center revenue to continue growing rapidly and projects it to account for over 50% of total revenue in the fourth quarter. The company expects a sequential improvement in non-GAAP gross margin in the fourth quarter. Here's what the CEO had to say on the call. He highlighted the success of Marvell's AI and cloud business and noted that while the carrier enterprise segments are currently experiencing cyclical downturn, they will eventually recover and contribute to Marvell's growth. CEO also mentioned that the custom silicone opportunity is growing and will be a larger portion of Marvell's total addressable market going forward. All right, so kind of going back to the charts, we have seen in recent weeks how NVIDIA is taking out, or in the process of taking out, all-time highs. Again, while Marvell has not yet taken out this year's high thus far. Again, this could be the pullback before the next leg higher. I'm just kind of looking at the price action here. We'll put a line in the sand at 46.50. That's where we had resistance, which became support. Resistance, support. So this is a line in which price likes to gravitate to. Now here's the next level that price needs to breach and close above if price is going to move higher in the short term. And I'm going to mark off the $58 level. And as you can see, that is resistance, which was support. And we'll probably see that a little better on the daily chart. Scrolling down to the daily chart. This was earnings. This is why we push price higher. So we had earnings back in May on huge volume. Makes sense that price came back and then reacted. All right, so what do we have? We have the 200-day moving average creeping up. We have the 50-day moving average creeping down. What remains to be seen is whether we get a depth cross. That's where the 50-day moving average crosses over the 200-day moving average. And that would be a signal that more downside risk is forecasted. However, these are lagging indicators. Price action is not lagging indicators. So again, this is that low I was referring to on the weekly chart. This is the $58 resistance support band. And if price can breach this level and close above, there's no levels of interest for sellers to push price down until you get to the $64 level. At the moment, there's no trade setup. However, one can dollar cost average. Again, Marvell is riding the AI wave, which is in the early innings. We have at least this decade as an opportunity to ride the wave as well. Look for Marvell to eventually move higher over the coming years. Thanks for watching. Subscribe. Please like the video.